Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 4th of November 2019, and we're going to discuss why we believe stock markets, and especially US markets, are likely to rise to record levels in November, going into December, and possibly higher again into 2020. So let's investigate. We have already seen in the first couple of days of this month, US stocks rising, with the Dow Jones at 27,347, just 12 points off its all-time high, which was 27,359, set on July the 15th. The S&P 500 at 3,066, already at its all-time high. And the Nasdaq Composite Index at 8,386, also at its record high. But how is this possible? 12 months ago, many people who follow this channel support Peter Schiff, who predicted the imminent crash of the stock market. He even stated on Fox News last year that stock markets and the economy are bubbles waiting to pop. On the Russian state-sponsored media channel, RT, on October the 24th, 2018, when the Dow stood at 25,191, the S&P at 2,740, and the Nasdaq at 7,437, Peter Schiff made the following predictions.
Well, the signs are already there. I mean, look, the stock market is falling. 40% of the S&P is already in a bear market. So the stock market is forward-looking to the next recession. You're looking at what's happening with the home builders, the housing stocks, the financials, the retailers. All these are the same things that were happening in 2007, leading to that crisis. So people need to be prepared. This is not only going to be an economic crisis, but a political crisis as well, because the Republicans are going to take the blame and socialism is going to be seen as the solution, and it's going to make the problems that much worse when it's implemented, 2021. So what you've got to do is get out of U.S. dollar assets. The dollar is going to be the biggest casualty along with the American standard of living, but you've got to invest in foreign assets. Look at some of the bargains in foreign stock markets, emerging markets that have been depressed by the strong dollar. They're going to see a boom when the dollar weakens.
Interesting, in that all of the equity markets are between 8 and 11% higher than then. The dollar index is over 1 point higher and has been 3 points higher at one stage recently, and the MSCI Emerging Market Index fell 14.57% in 2018, literally at its bottom when Schiff was speaking. And even today, with its subsequent recent rise, has still only managed a gain of 9.2%. Not bad, to be fair, but hardly earth-shattering, in that you would have done better with the S&P 500. Now, to be fair to Peter, Harry Dent has also predicted imminent dollar and US equity collapse. But this story is not new. If we go back to the 28th of May 2013 on Fox News, Peter Schiff stated the following.
I like countries where I think that purchasing power is going to go up, where I think the currencies are going to gain against the dollar, where you have less regulation, lower taxes, more legitimate economic growth, not just bubble blowing, which is all we have in the United States. You keep hearing all this talk about, an exit strategy. I don't believe the Fed has an exit strategy. They're talking about tapering, but tapering isn't an exit. That's still growing the balance sheet. The Fed cannot shrink the balance sheet. They can't become the biggest seller of bonds and mortgages without collapsing the market. So I don't want to invest in countries that are based on an asset bubble. I know how badly that ends. So I'm looking at places where there's legitimate economic growth, where they have less government and more opportunity.
Hold on. What was the Dow then? Well, remember, today it's 27,347. Now, on that day of the prediction, the Dow was, wait for it, that day was called Super Tuesday, where the Dow hit a record high and Schiff appears stating that it's all downhill from here. Well, it actually stood at 15,409. So since that great prediction, the Dow has risen some 77%. The S&P has risen 87%, and the Nasdaq has risen an incredible 142%. What was the dollar index at the time? You guessed it, 84, compared with 97 today. Now, we mention Peter Schiff simply because he's one of the most high-profile financial commentators, and we know that a number of our listeners support him. So, what did we say back in 2018 when Schiff was advocating this imminent collapse? Well, you can listen to our podcast of the 12th of October 2018, entitled Stock Market Collapse, Is It Time to Jump? And we've placed a link in the description box below. We have also added here our conclusion. And please bear in mind, at the time, when the Dow fell 545 after the previous day fall of 830 points, standing just above the 25,000 level, and the Nasdaq was down 460 points at 7,329, this is what we said. So our overall contention is that no, we're not at the edge of the precipice, and there is no need to jump. However, we do have some uncertainty ahead, and with the US citizens about to go to the polls in a few weeks' time, there will still be further uncertainty and market turmoil. Since then, we have published podcast videos, quite a number, stating to expect increasing stock market levels reaching new highs before the 2020 election. And this is our continued view. You see, the pumpers want you to believe that markets are about to collapse so they can sell you gold and silver, because without the fear trade, there simply is no desire to acquire it from members of the general public, save a few jewellery pieces and converts like us listening to this and other gold and silver channels. Now, we admit that stocks would not be our most favoured investment right now, as they are beginning to look expensive. But that still does not deter them from the fact that they are still likely to go higher, certainly in the short term. Now, you don't have to take just our word for it, though we have been pretty accurate to date, and far more accurate than Schiff and Dent, who are supposedly heralded as experts in these matters. Now, Reuters have reported today, and we'll quote them. The VIX fear gauge of US stock market volatility is at its most subdued level since July, and the dollar, whose persistent strength has been another source of tension on world markets over the past 18 months or more, is easing back gradually. Without any real specifics, US and Chinese officials have once again convinced everyone they're about to agree later this month, the so-called Phase 1 of a bilateral trade deal to end a year of tariff wars between the world's two largest economies. The other source of relief for investors is that US and global economic data appears to have stopped deteriorating, at least lifting for now fears of an emerging recession over the horizon. With 3/4 of firms having reported for quarter 3, the aggregate is showing a modest profit rise of 0.2% against pre-season forecasts for a shrinkage of more than 3%. US economic surprise indices remain in positive territory, despite a retreat from recent highs, and the overall surprise index for the G10 most industrialized economies is flirting with a positive reading for the first time since mid-year. The US yield curve between 3 months and 10 years, a key bellwether of US recession when inverted, is climbing yet again, having been negative for much of the time since May. At a positive 23 basis points, the curve is now at its steepest since early March." Unquote. So you see, all of this positive news acts as a tailwind for equity markets, and one should not be surprised to see them reach regular record highs moving forward. Yes, eventually this train will stop and reverse, and those with precious metals will see their values rise considerably. However, with President Trump determined to keep pressure on the Fed to reduce rates and to prop up stock markets as a visible sign of his administration's economic success, we should not be surprised to see policies, including even potential tax cuts early next year, not to mention infrastructure spending, to attempt to drive the US economy forward and equity markets with it. Now, gold and silver prices, in our view, will slowly rise over time in conjunction with equity markets as the US dollar weakens slightly and investors gradually become more cautious the higher the equity markets go. But let's be under no delusion. We are not expecting an imminent equity market collapse. And if anything, more rises are ahead. Should you invest in equities? That's entirely up to you. Should you invest in a Dow Index? That's entirely up to you. We are more cautious, certainly from the United Kingdom. But that said, we still envisage higher markets in the foreseeable future. Eventually, it will all come to an end. But that time, in our view, is not yet. What do you think? Higher markets by the end of December or a crash in 2019? You know our view. Let's hear yours. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.